We're going to get the lowdown now on emerging market bond ETFs with our ETF research director, Nina Mishra. Well, at least we can say that U.S. Treasury bond yields are at kind of ultra-low levels right now.
Yes, if you look at the yields, they're either returning minuscule returns or yielding negative returns too if you take into account inflation. So the investors looking for yields from their investment portfolio, they are looking for alternate sources.
Right.
And these bond ETFs could be interesting choice for those investors. They yield around 5% and are relatively safe, not too much of risk.
So is that the whole case for investing in the emerging markets?
Well, we have discussed the case for emerging markets earlier also. They are growing at a faster rate than the developed countries.
Yes.
Currently, they contribute about 1/3 to global GDP, and their share is rising. It keeps on rising because their growth rates are much faster. Then they have low correlations, so you get diversification in your portfolio, and plus you can get high yields there. And then there is
sovereign debt is because of the high yields that are available?
Yes, exactly. In addition to high yields, these governments, some of the emerging market countries, they are in solid fiscal shape, much better fiscal health than the developed countries. Countries like Mexico, Indonesia, Brazil, Peru, these countries have excellent fiscal health, low debt to GDP ratio. They have prudent macroeconomic policies. Many of these countries have high level of foreign exchange reserves, deep and liquid foreign exchange markets. So the chances of sovereign default are very, very low. That's why I mentioned that risks are low, whereas you can get yields around 5%.
So if we wanted to get into some options available to investors,
there are two kind of choices, in fact 4 kind of choices available to the investors. They can either invest in the debt issued by the governments or the debt issued by the companies there. Then they can invest in the debt issued in US dollars or debt issued in local currencies. Now I would like to add that most of the emerging market currencies, they have more volatility than the US dollar. Especially whenever there is some global disturbance or some global economic issues, US dollar benefits due to its safe haven status.
Still that status, yeah?
Yeah, for now that status is there. So for investors who do not want short-term volatility in their portfolio, for them it is preferable that they invest in US dollar denominated debt so that they don't have to deal with the currency issues. But for investors who are looking for longer term investment opportunities and they do not care for shorter term fluctuation, then probably it is preferable to invest in local currency denominated debt. And these are the choices available in US dollar denominated debt and local currency denominated debt. For US dollar, we have EMB and PCY, and for local currency, we have ELD, EMLC, LEMB, and EBND. And today
you're going to get into a couple of those.
Yeah, I'm going to talk mainly about US dollar denominated debt ETFs.
So the first one you want to talk about is JP Morgan USD Emerging Markets Bond Fund, right? That's the EMD ticker?
Yes. The ticker is EMB.
Or EMB, I'm sorry.
That's fine. The expense ratio is 59 basis points. It yields 4.7%. About 40% of the holdings are investment grade rated, 30% are not rated, and 30% are below investment grade.
Just can't count on these dime store glasses anymore for some reason. And then you got the Powershares Emerging Markets Sovereign Debt Portfolio.
Yeah, the ticker is PCY. It focuses mainly on the government issued debt, charges an expense ratio of 50 basis points, yields 4.8%, and about 60% of the holdings are investment grade rated.
Okay, so do you own either one?
I don't.
Okay, do you own any of the ones that you mentioned?
No,
okay.
None of these.
All right, now that we've got that out of the way, I'm going to remind you that you can see more ETF-related articles that are very interesting. They're right on Zacks.com's website. In fact, all you have to do is go to the homepage if you're not on the site already watching this video. Scroll down to the bottom of the homepage until you get to the ETF module near the bottom. Any one of those live links related to story headlines can take you right to that ETF section of the website once you click on them. With Nina, I'm Terry Ruffalo.